In this video, I want to explain a little proof that I created. This may seem like something very simple, but it's actually pretty sophisticated stuff. So you remember I created the accounting equation example and the SFAC 6 elements of financial statements logical system example. So both of those, I could keep those. I could prove that they're consistent, complete, and precise, and I can keep them in control. But where they fall short is that they don't have all the information patterns included in them. So what this proof example does is it adds those additional I call them concept arrangement patterns. So when you think about a report, it's not one big thing. So, and working at the fact level, you can't achieve many of the things that you need to be able to achieve. So there's a sweet spot that I call a fact set. It's basically you're breaking down the individual structures of a report so that you can work with them effectively. So this is what I mean. So here you can see some information about 6,023 reports that I interrogated with a software application. So you're breaking down all the facts and the networks and getting averages and whatever. And you see that the average number of facts per network is only 18, and the average number of fact sets is 11. And I'm not going to go over this in detail, but basically I can break a report down into pieces. And those pieces, the fact sets, 754,430 fact sets found in about 6,023 reports, exactly 6,023 reports. And those, the information in the fact sets can be broken down. You have 54% of the 750,000 were text blocks, 24% were sets, 16% were roll-ups, 5% were roll forwards, and the other 1%, or only 7,546, were either a roll forward info, adjustment, or a variance. So this is what I mean. I'm going to go into this in detail and explain to you what I mean. So the accounting equation, so I went over this in this video in the impediments section, what causes a report to go to be wrong. And I did the same thing for the SFAC 6 elements of a financial statement example, which is a little bit bigger, has some additional structures. So in this report, in this proof, I'm going to expand on the SFAC 6 example, and I'm going to go over this in the end, but basically you can see that everything is interconnected, and I can prove that it's interconnected correctly in this example that I created. So I'm going to start with an information pattern, a roll up. I think there were like 16% of all pieces of a report, fragments of a report, are roll-ups, and this represents a roll-up. Now, a roll-up can be nested, and you can have grand totals and subtotals, but a roll-up, you understand the notion of a roll-up. A roll forward, accountants understand this, basically a reconciliation of a beginning balance to an ending balance, and the statement of changes in equity is an example of a roll forward. And then just a general arithmetic expression, assets equals liabilities plus equity. We have that on the balance sheet, and then the three statements are interconnected via this statement of change, or the changes in equity. Okay. So now I'm going to add additional information patterns to this to build out this proof example so that I have 100% coverage of all the possible things that would ever appear in an XBRL-based financial report. So the first thing I'm going to add is what I call an adjustment. So people may refer to this in different using different names. So basically, you have an originally stated balance, you have a restated balance, and an adjustment reconciles between the two. And these are used for when you want to change equity because of a change in accounting policy or a correction of an error. So no accountant would dispute that this is something that would likely appear in some financial reports if you have a prior period error. Another thing that can appear is what I call a variance. And a variance is simply for example, a budgeted figure reconciled to an actual member via some difference or variance. Okay, and you could forecast. There are lots of different types of scenarios, but if you're going to reconcile this to actual, this is on the income statement. You have to make this plus these new facts tied together in this fragment and make them also this fragment tie with other fragments that have the same information. The next pattern is a roll forward info. So basically, this looks like a roll forward, but it's really information about a roll forward. So it's you have a beginning and ending balance, but it's not really the balance. What it is it's some sort of a ratio that is used to provide additional supplemental information that relates to a roll forward. So I'm not going to go into this in more detail, but that's what a roll forward info is. A set is simply some set of facts. They can be numeric or non-numeric. And here, these sets, they don't tie to anything. So the numbers themselves, the individual facts tie to another piece in the report. But the set itself, that pattern does not tie to any other structure or fragment within the report. Okay. Text blocks likewise don't tie to anything, but you need text blocks to represent the words that are in a report, as contrast to numbers. And I'm showing 3 because I want to point out that a text block could be just text, or could be an entire table, or it could be other types of prose like an unordered list or an ordered list. The next, and I believe the last, is what I call a member aggregation. So here, this is exactly the same logic of a roll up, but it's represented using dimensions in XBRL. And this member ties to the income statement. So you have to make sure that this is represented correctly so that it is correct within this fragment, but also correct in relation to other fragments. So when you do that, you get this. This is all the interconnections. So here you see the 3 core statements: the balance sheet, the income statement, the statement of changes in equity. Statement of change in equity ties the balance sheet and the income statement together, and then this prior period adjustment fits together here, and this member aggregation fits together here, and then this fits with all of that. And basically, you can see all these formulas. Here is that one simple report verified. These are all the numeric computations. It's verified using the UB matrix, the XBRL cloud, the Fujitsu, and the RHEL open source XBRL processors that all have formula processors, and everything. They all show 14 executed assertions, and all 14 are satisfied as opposed to unsatisfied. Everything passes. So basically, I can prove that this report, everything fits together as expected, plus it has every concept arrangement pattern that you would ever find in a report. Basically, every fragment that is reported is some permutation or combination of those 9 patterns. Anything. And you can prove that each of those patterns is correct, and therefore you can prove that the entire report is correct. So what about this kind of stuff that you see in a lot of SEC reports? Okay, what pattern is that? Well, this is basically an abomination. What they've done is they've put a bunch of stuff together in a network. It's not organized appropriately, and that's why it looks the way that it looks. You can clearly see that the yellow shows 1, 2, 3, 4, 5, 6, 7, 8 facts that go into a completely different disclosure. If they pulled that out alone, it would make this look better. If you pulled out some of these other disclosures, you could basically whittle this down into one of those 9 patterns. And here I try to identify them, but I can explain why this is just logically an abomination, basically. So anyway, I'm going to stop there, and I have all this documented, and I'll stop there.